Wow, Chuck Malamut and Kirk Conover. It's like, they're being rough. They're being rough on the mayor of the morning. And ladies and gentlemen, the president of Town Square Media, Atlantic City, Michael Rubel, was in the studio as well during the break. It was a great break. We now transition seamlessly from Wharton School graduate Kirk Conover, who with his Roger Federer hat on a rainy day has just left the building. Thank you, Kirk. Thanks for all that you do. Chuck Malamut is here. We're in our 26th year together on the Early in the Morning program, the Chuck Malamut program, every Tuesday morning in the 8 o'clock hour. Chuck leads his group, the Malamut Group, at Morgan Stanley's Northfield, New Jersey office. You can reach them for all of your financial planning needs at 609-383-2010. The following program is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. Chuck, thanks for making it in on a blustery, rainy day.
Good morning, Harry. Fortunately, we're not north of I-9 or 195 right now.
Yeah, they're getting crushed.
They're getting
3 inches an hour.
Well, the good news is it will be over soon.
Yes,
and the weather I don't think is going to warm up in the near future. So maybe the snow will be around for a bit. But the good news is that there are some delayed openings. I guess I heard from you and Kirk this morning there were a few closures. But there was traffic on the way in, Harry, was very, very light. Sort of felt like it was a holiday, like a holiday.
Yeah, because the governor has closed all state offices. County offices are open on normal schedule. Atlantic City Public Schools closed. Brigantine Public Schools closed. Ventnor Public Schools closed. Hamilton Township Schools are closed. Everybody else, unless they did not report in, appear to be opening normal time. And Egg Harbor Township, for example, Fred Nichols does a good job making these decisions that basically, I'm not sure in rural Galloway Township if it's the same way, Chuck, but here in Egg Harbor Township, either the student is being bused to school or the parent is bringing the child to school. So there's no reason not to have school.
Yeah, I drove by Holy Spirit. It was dark, so maybe
you think Holy Spirit might be closed?
I don't know if they weren't open at the time. So
and there's usually activity at Holy Spirit earlier than a lot of school districts.
Yeah, so maybe it's a delayed opening.
Okay.
Or maybe they are in fact closed. Not sure.
Okay, but they did not report to me, so we'll check on that. Chuck, what's the market update?
Well, Harry, believe it or not, the market actually last week was down slightly. The S&P 500 fell about 0.5% and was still over 6% year to date. However, the small cap, the Russell 2000 that we oftentimes look at, declined by about 2%, making it marginally higher for 2017. Now, if you get into the individual sectors within the S&P, and we do talk about this fairly often, Harry, the energy, there's been a lot of discussion with energy and OPEC cutting production. I saw that this morning, and the fact that we have an oversupply here domestically, in the U.S. Energy and real estate, had a really, really tough time last week. Real estate, Harry, last week was off, believe it or not, 3.6% in the week itself. Energy was off 2.6%. So if you look year to date as far as, the best and the worst sector performance, energy right now, Harry, is down about 7.5% year to date. In the meantime, the winners, technology, had a pretty decent week. They were the best performer, and right now technology year to date is actually up over 11.5%. And one of the things we kind of talked about is as we got through the election, and remember when President Trump had all the healthcare executives in Washington, and basically slamming his fist on the table, said, I'm cutting prices of drugs, and a lot of those companies, had a really, really, tough time of it for a bit. Well, believe it or not, Harry, right now, healthcare year to date's up, second best performer in the S&P, up over 10%. So, again, if you learn anything from this exercise, I mean, it's something we've talked about it. It seems like forever. You need to be patient, and you need to have a plan, because without the patience and without the plan, if you're listening and watching and waiting for the next headline to cross, chances are you have made a number of stumbles of late. And I would almost bet, if you operate like that, you are basically selling at lows and buying at highs.
Chuck, let me just slip something in real quick and then right back to you. Holy Spirit High School, an impeccable source, just reached out to us. Holy Spirit High School is closed today.
Okay, so there you go. All right, good.
You saw what you saw. You still on the market update, or you going to the labor market?
No, so Harry, if you take a look in other asset classes, and probably one of your favorites, and I'm sure I'll probably take a beating for this, Treasury yields increased last week in anticipation of a Fed rate hike, which is going to obviously be announced tomorrow.
Yes.
U.S. dollar declined.
Chuck owes me 10 pizzas when that announcement is made tomorrow. 10.
No, Harry, I think I might.
Rocco's opening up very soon. 10 pizzas.
I think at best I might owe you a total of 2, but
okay.
I don't keep track of when I win, because you would probably owe me about 4.
That's a short novel, because when have you won?
Harry, there's plenty of opportunity,
all right.
and there has
I want you to name one.
Well, I will on the break. I will.
Okay.
I will browbeat you, and you
probably
won't.
You'll go into your vast network of computers to try to find one.
You probably won't come back.
1983.
So if we play a best of after the break, your listeners will know what happened to you. As Harry, you're laying on the floor and crying for mercy. But in any case, the dollar declined last week, and as I mentioned to you, oil prices also fell pretty sharply. Which created some anxiety within the equity markets. If you look at the Treasury market, Harry, the 10-year, and that's something that we oftentimes spend a lot of time with. It has increased. We're right now yielding about a 2.62 on the 10-year. If you remember, we got to these levels shortly after the election, and then it backed off into the 230, 240 range. So, it's been broadcast. Everyone clearly understands that there will, in fact, be an increase tomorrow, probably 25 basis points. The Fed has become a lot more aggressive, so it seems, with respect to the language and what they're talking about. And so we're really looking forward to not so much the announcement of what they're doing that day, being tomorrow, but more importantly, on a go-forward basis, are we looking at an additional 1 or 2 or multiple, hikes during this year, 2017?
I think they're telegraphing it pretty plain that they're talking at least 2 more after this one.
Well, I think, Harry, a lot of it has to do with now it's. We've gotten through earnings, and earnings for the most part have been relatively good. But again, we seem to be hitting that old, standard where we're not necessarily getting it on the top line, but we're making it on the bottom line. And then ultimately, how much more can these companies squeeze, out of their expenses to get to their numbers? So. One of the concerns has been the increase in potential wages as we look at the labor market. So let's think about this for a second. That the labor market is a source of strength within the economy. The data that we saw in February showed a healthy growth of 235,000 new jobs, and the unemployment rate declined to 4.7%. Now, I heard multiple interviews and discussions about the February numbers. And the one thing that I think that the bannering that's going back and forth is the fact that during the previous administration, there were increases in new jobs that were created. However, the average hourly earnings that those new jobs created were a lot of service-oriented jobs, paying either minimum wage or slightly above, versus a lot of the jobs now that are being created in manufacturing and mining and which pay upwards of $28 to $35 an hour. So obviously that's going to have a very, very positive impact within the economy. So if you look on a year-over-year basis, Harry, wages have increased almost 3%, and that should be positive for consumers with respect to the way that what their mindset is with respect to spending and how they spend. But also could in fact be somewhat of a decline or a drag as we look at potential profit margins from these various corporations.
Chuck, we're going to take our first break. I just want to remind our listeners we're going to have breaking news at 8:50 this morning. So in exactly 35 minutes from now, we will have breaking news. We will be able to share with you if a very well-known, very prominent leader in our community, whether or not they will be running for the New Jersey General Assembly. It will be a Hurley in the Morning exclusive, and I know that Kirk is making his way back to the office. Kirk, don't miss it. We're going to let you know. And, Kirk, if you want to text me with a little bit of love, I will give you a preview to the 8:50 breaking news, especially considering your 2 hours of broadcasting partnership here this morning. We know the answer, whether this person is in or out. We will share it with everyone coming up right after Chuck's program. This portion of our program brought to us by the Atlantic City Jitney Association. They have been providing transportation services since 1915, so that's 101-plus years, almost 102 years, making them one of the longest-running transit companies in American history. The Atlantic City Jitney Association operates 190 jitneys 24 hours a day, 365 days a year. They offer a distinct variety of customer services, including their regular route service, which, keep in mind, this is not your yesterday Atlantic City Jitney Association transit company where it was just Main to Jackson Avenue, and that's it. It's much more than that. Marina District and more. Rail terminal service, airport transportation, to and from Atlantic City International Airport, and they really shine in their private events and more. From personal experience, I can attest to the outstanding service that the Atlantic City Jitney Association provides because I am also their client. We use their fabulous customized service several times a year to and from the Atlantic City International Airport and elsewhere. We find it as a family to be a great way to begin and end your vacation, all being together, not in multiple cars, leaving your car somewhere else for a week or more. It's just great. You don't have to worry about parking your car. You don't have to worry about warming up the car. You can come out in the winter and get on a heated jitney, put all your bags on. We make 2 other stops. We all arrive at the airport together, and then we walk right in to the terminal, and the next thing you know, you're in Florida. And it's just a terrific way to begin and end your vacation. Complete shuttle services also available. Dial 609-646-8642. That's 609-646-8642. They're on the World Wide Web at jitneyac.com. Please tell them that Hurley in the Morning sent you. Back with Chuck Malamut in 60 seconds. 19 minutes past the hour, Hurley in the Morning with Chuck Malamut, our official financial advisor. A reminder for all of your financial planning needs, turn to the exclusive financial advisor to the Hurley in the Morning program, Chuck Malamut, who we've known for over 35 years, and we've been doing this program together for the 26 years that we've been together. Day one, Chuck has been with the program. Our official financial advisor, make him yours, 609-383-2010. Chuck, you were saying.
So, Harry, why don't we chatted about the labor market. Let's move on and talk about the Fed. Meeting, obviously, this week. So the labor data that we just chatted about, the expectation is that the Fed is going to obviously raise rates this week. All bets are 25 basis points. Harry, I have not heard any strategist or analyst or economist come out with more than 25 basis points. Probably more important than the actual rate hike itself is going to be the statement. And typically what happens at 2:15, Janet Yellen, does come out and discuss what the Fed and various governors are thinking about. So they may, in fact, Harry, signal a more hawkish tone that could indicate more aggressive future rate hikes than obviously investors had previously or currently anticipated. So I guess that kind of plays into what you chatted about last week. and that's maybe the differential between our president now and someone that was in running our country in the previous administration, and maybe the way the Fed does in fact look. Although the Fed claims to always be not a political entity. So I think that sort of at a tug of war here between
Chuck, they claim they're not a political entity, although they do behave very differently depending on which political party is in power at any given time. And I've been tracking them, as you know, for over a quarter of a century, and I think there's a lot of credibility to that statement. They're behaving much more aggressively now than they did the prior 8 years.
So Harry, the question is, is the Fed going to make a move? I think everyone understands that is going to happen. But the question is, do they come at every meeting? Do they come every other meeting? And a lot of it, a lot of their decision making is based on, what data they are in fact looking at. So, so if you think about it, a month ago, Harry, really a Fed rate hike was really not, in the cards. It really wasn't, discussed. Everyone was of the opinion that we would wait till the June meeting. But if you looked at what happened here, that in fact did happen. It sort of reversed itself, where they had the Fed engineered a pretty significant turnaround in March, with basically signaling, what they think will be happening. But the good news is markets, for the most part, were undisturbed. I don't think that, Harry, if they make a move tomorrow, that the market is going to get is not going to move significantly higher or lower, based on what they say. I mean,
what's built in.
So if you think about it, usually when that happens, the market, has a tendency, to throw somewhat of a temper tantrum. But so for what they've been able to accomplish, it's certain. I mean, not. I know you're not going to give them any credit, but it's not an easy. It's certainly not an easy. It's not an easy feat to get done.
I don't give them credit because I think they're politically corrupt. But this is in your wheelhouse, though, and you have a lot of credibility in this area. When a Fed chair telegraphs, basically, we're raising interest rates at our next meeting, and we're going to raise interest rates 2 more times during the course of the year, the markets, they listen to that in advance of the actual meeting. So isn't a lot of this already built in? Yeah,
Harry, the old expression is baked into the cake, so to speak. I mean, it's going to come as no surprise when this happens tomorrow. Now, your listeners obviously need to be prepared. If you have a home equity line, that's tied to prime, your rate's going to go higher. I mean, the question is, are we going to finally get on track where savers, that have money in a money market fund or a bank savings account, are they going to finally get paid, for having their money on deposit? But, that's always, as the savers are always the last to be compensated, and the borrowers are always the first to be charged, so to speak. But that's certainly not unusual. So, but Harry, here's what's interesting. Typically when you see situations like that we're getting into right now, where the Fed is pretty much telegraphed we're going to increase rates, volatility does have a tendency to move and spike. But this time, there's been virtually no volatility. I mean, the 5-year Treasury yields have risen along with the 10-year, to anticipate this rate increase. The markets are pretty unfazed at this point in time, Harry, and that's because of the confidence that that we are seeing and exhibiting with respect to our economy. And Harry, think about it. We're now positioned where, what do we always talk about? For many years, we were taking baby steps. We're able to stand on our own. So now with a whole lot less monetary accommodation that is being put out there, the fact that the market has been somewhat stabilized, and that's why I don't think, Harry, you're seeing the volatility that we have previously seen when you get moves
Chuck,
like this.
I think it is a philosophy of governance. If you look at how much, I know it's over $2 trillion. Is it over $3 trillion now? I'm not sure, but it's over $2 trillion since November 8th that our financial markets have grown.
Yeah. So, Harry, look, and it's not just here. If you look at what's happening, outside the U.S., I mean, the question is, are the bond markets now, in fact, being too complacent? Are they kind of just sitting there and and not accepting the news, or just sort of shrugging it off? So, the question is not only what is happening here, what is happening overseas. So you think about it, an aging population, low interest rates in Europe and Japan. Because of that, that is going to that is going to actually help us here in the U.S., Harry. Any rise in long-term U.S. yields is probably not going to happen. So the curve, as we look at it, is probably going to become a lot more flatter over time, versus that old traditional, sloping yield curve. Don't be at all surprised if it flattens out, within the next, 12 to 18 months.
Chuck, a very good friend of mine is writing me, and I want to just share with our listeners, be very careful. We've been saying it since 6 o'clock this morning. No, we're not getting snow, but we are getting just a helping overdosing of rain. And a very good friend of mine has written me, and I know that his beautiful wife, Susan, is out in it. The roads are absolutely terrible. I've heard from a few people that have hydroplaned. Avoid the low-lying areas. If you're going into the city, take the expressway. I'm sure at some point, and at 9:30 is a pretty key point. Kirk Conover brought that up in the 6, 7 o'clock hour this morning in terms of the tidal flooding and things. So we told you yesterday, and it's playing out according to Hoyle, that we were not going to get snow because of the temperature, but that we were going to get a lot of rain. I believe we've already had more than a few inches of rain, and then it's a matter of how much can the sewer systems take, and our various communities, how well do they keep debris out of the sewer systems, and then we'll have the tide, and then hopefully this wind will not keep the tide from receding so that we don't have an even more astronomical one the next time, and then tomorrow is still windy and possibility of some more precipitation. But if we can get through today, and so far the grid has been holding. I checked the east map of Atlantic City Electric. It's been holding really well. It flickered here in Northfield. My wife, Margie, told me that it flickered at the Ponderosa in EHT. But, things seem to be holding. So just, be guided accordingly and be safe out there. Give extra distance. Make sure you have your lights on with the wipers. And just understand at any moment, we've all had it happen, where you drive into some heavy water and the wheel wants to jump out of your hands. Hold that wheel and, just be safe, please. Chuck, let's get our bottom of the hour break, and we're going to come right back. Chuck Malamut is here. One more power segment straight ahead. And not only am I going to break news at 10 minutes before the top of the hour, Dateline, early in the morning exclusive, Dateline, New Jersey General Assembly, District 2. And we will be able to either confirm one way or the other if a significant, well-known community leader is going to step up and run for the New Jersey General Assembly, or if he will not run. That answer will be shared first here as a early in the morning exclusive coming up in 20 minutes. Welcome back. We are visiting with Chuck Malamut, our official financial advisor of the early in the morning program, at 32 minutes past the hour. The rain is still coming down very, very heavy. It's 40 degrees, though, so we have that going for us. And if you are north of 195, you're getting about 3 inches of snow per hour. We're grabbing, it seems, at least an inch of rain, almost, it seems, per hour. That might be slightly overstated, but we're getting a lot of it. Chuck, time is yours.
Harry, your second favorite topic, geopolitical risks here. So let's think about this for a minute. The media has done a remarkable job, amping up all of us as we look at what is being accomplished or trying to accomplish down in Washington. But what is happening, Harry, I think if you put that aside for a minute and you understand what happened with the fourth quarter earnings, and even though earlier this morning we chatted about we're still having some issues with respect to the revenue number. The fact of the matter is that we're pretty optimistic, Harry, here with respect to the growth of our economy, and that's obviously. If you take a look at consumer confidence numbers that come every month, they continue to increase as well. So you have elections. You have the Dutch election. You have elections in France. You have ongoing debt issues in Greece that kind of went to the sidelines. We haven't heard a lot about that. You have a more aggressive North Korea, and you have obviously political uncertainty here in the U.S. However, we think that the fiscal stimuluses that are being put in around the world should help increase global economic growth. So,
with America leading the way this time,
it is, and that's your point is very, very well taken there, Harry. So the fact of the matter is that if you take a look at most people say, well, geez, nothing has really been accomplished here in the equity markets of late. We've gotten. Last week, as I mentioned to you as we started the show, the S&P was off slightly. The Russell was off about 2%. But think about you don't want the market every day to move up. I guess we do. If we are long equities, but it would just be an easy game to play if that in fact happened. But I think the market here at this point in time is doing some significant base building. As we move on to higher levels, think about how we were able to, it took forever to get through, get the Dow through 20,000. It seemed like we talked about this for weeks, and I know you were very, very giddy. And,
I just like more than you because you're the best at this. I just get sort of excited about psychological type barriers, and might even be some of my running career beating 2 minutes in the half mile or this time in the mile or 2 mile. And I just thought 20,000 was very cool. And then look how lickety split it went from 20,000 to 21.
Yeah, so now we would so you think about it. We go the Dow at the end of last week was 20,900, and slightly over that. But you think about that move, exactly how quickly that happened. And that's not uncommon when you least expect it. The market gets some news, gets some reports, gets some confidence from whatever particular numbers that come across. And you make those bold moves very, very quickly. And then you have a tendency to digest that. And then ultimately, don't be at all surprised if we sit here for a bit, as we do hopefully some base building. Because quite frankly, Harry, today is March the 14th.
Yep.
Right. So, we're going to be reporting
on the first quarter.
Yep. Within in roughly starting in 3 weeks.
Yeah, it's crazy.
So,
let me ask you a question, Chuck, it's not in the abstract for folks. When there's a change in the philosophy of governance in our country at the executive branch level, even more so than when it's a congressional change, because they do what they do legislatively. It's the executive branch that sets policy and runs the departments and creates, I think, the climate in the country. It's why we only have one president and we have 435 in the House and 100 in the Senate. So it's 1 versus 535, but the 1 is the big dog because they set all the different, the tenor, the tone. And what I'm getting at is look at all these companies. We could name them one by one that say they're coming back to America or they're going to build again in America or do more in America or build a new plant in America and hire more people in America. This can only be good for our financial markets.
Well, Harry, I've read numerous articles about the repatriation of bringing money back into the U.S. and how that's going to happen. And then on the flip side, you read about the import, the border tax, and how it's going to hurt retailers in particular. But I think the fact of the matter is, if we're able to do the repatriation and be successful at it, that's only obviously going to help us.
Yeah, without a doubt. Chuck, my friend John is on the road right now I'm going to let you see. There's what it's like driving out there right now.
Harry, I came here this morning.
Yeah,
I get it.
Yeah.
It's you need to take your time. If you're running behind schedule, you need to build in. If you're traveling from Galloway to here, you need to give yourself an extra 5 to 10 minutes, and just be careful because.
Exactly.
But the good news is we're not getting 3 inches of snow an hour. That's the good news.
Without a doubt. All right, let me make sure of something here. I'm going to my trusty list here with Chuck. Market update, labor market.
So we did
Fed,
geopolitical risks,
U.S. energy sector.
Yeah. So we kind of talked about this a few minutes ago as we got started. Energy, worst performing sector within the S&P, and you think about the contrarian theory that we oftentimes talk about, where you have a winner. You take your best 3 sectors over the course of the year. And don't be at all surprised if the following year, they are could potentially be at the bottom. And what was the best performing sector in 2016? Energy. And what is the worst performing sector year to date?
Energy.
So,
and is that because financials are obviously doing better, but also because prices have been down?
I mean, there could be a number of factors. So you think about our, the U.S. energy sector as we know it, could very well remain under some pressure.
I've enjoyed
on a go-forward basis.
I've enjoyed how stable the rates have been.
You're talking about the prices at the pump?
Yeah.
Yeah. So if you look at the price of gasoline as of last Friday, as far as, domestically in the country, the national average, $2.34. A year ago, we were at $1.84. But I think most importantly is, add into what you just said, prices only moved 3 cents.
And that's incredible.
From the end of December.
In New Jersey, if we want to be parochial for a moment, if we didn't put that stupid tax on, 23 cents or whatever it is, we'd be at low 2.0. Around $2 a gallon, which, I would take that for the rest of my life. Yeah.
So here's what we think about energy at this point in time. As I mentioned to you before, the sector, is down, year to date, over 7%. The market itself is up about 6%. And that includes obviously, what's happening in the energy sector. So. Most of the gains that were posted, relative gains were posted in 2016. A lot of that has been given back in that particular sector. So, energy companies, Harry, could very well continue to struggle here.
When do you know the difference between buying opportunity or not the right time? That's the challenge,
well,
right?
I think if you look at oil and or you look at energy, it's like anything else. There's obviously a dividend component to a lot of these stocks. And if the dividend is there and it makes sense and the company is going to leave if we think the company is going to leave the dividend, you find opportunities where, you just sort of, you make your purchase. You're not always going to buy at the bottom, Harry. We know that. But, if you strategically go in and dollar cost average and there's a company or a subsector within a sector that you like, then you take your dividend and you maybe you reinvest or you use it for your expenses, but eventually, and I think it'd be foolish for us to say, hey, in 6 months it's going to change. You never know that, but it's like anything else. This is a marathon. This is not a sprint. And you look to buy, items that are quote on sale. I mean, you always can't wait to get to the, either online or to the bricks and mortars with retail when items go on sale. Same thing happens here with equities. Same thing happens with fixed income.
Chuck, about 3 minutes left, exactly 3 minutes left in your program. And this one might be self-evident based on everything you've been sharing this morning and that we've been chronicling since November 8th. But give us your best couple of minutes on investor sentiment.
Yeah, so think about this, Harry, for a second. Sentiment,
it's got to be good.
Well, yeah, it is very good, but it could be maybe just a little bit overly optimistic at this point, and maybe a little bit. Investors have overlooked. We talked about the economy, we talked about political risks. I think, Harry, you can't forget about it, and you can't throw caution to the wind, but you got to be obviously, careful as an investor. So it's not as if we are, negative on equities. We're not. We're positive, and we're positive on other risk assets. But we think that markets, Harry, think about it. We haven't had a negative 1% move in how long?
Yeah.
So, the market is vulnerable. Volatility could increase. You could get that shock. Something could come, that shot across the bow could happen. So don't be at all surprised if the market, gives back some of the gains. But, we've rallied significantly since the election. It looks like we're now in that more of a trading range in the last several weeks. Investors are taking somewhat of a pause. They're looking for those catalysts that are going to determine the future direction of equity prices. I don't think tomorrow is a catalyst. I don't think tomorrow the market moves. I could be dead wrong one way, one direction or another, unless the Fed makes a statement that we are not expecting for them to come with.
But she's already made the statement in advance of the meeting.
Yeah, so if you look at as I mentioned, the global economy, I think it's going to provide, one of those signals that we kind of chatted about. The data we're getting, has been stronger over the last several months. Business and consumer confidence continues to increase. Outside the U.S., we have a fair amount of growth. It seems to be relatively solid. We could see an uptick in global trade levels as we get through the remainder of this year, but there's still a lot of risks out there. We haven't talked about the slowing, Chinese economy. Mm-hmm. We haven't talked about the increased protectionism we're seeing around the world.
We're very fortunate, though, Chuck. We slowed down. China roared.
Right.
We are picking up, and they are slowing down.
So the world economy is going to probably accelerate, Harry, but it's not going to be done in lockstep. So
do you agree the world is going to start to tip back to the United States, though, where
absolutely.
It was tipping away?
Yeah, exactly. So we talked about oil and what the impact could be, and that's going to hurt energy companies potentially, but it's going to help all other parts of the economy. So tomorrow is going to be very, very interesting. I mean, there's just a lot of focus on what the Fed is going to say. The yields moved, Treasuries moved last week higher. Bond markets have accepted the fact that we're going to increase rates, and that should have somewhat of a floor for bond yields on a go-forward basis. So,
and what I think it's going to be is almost a nothing burger, because she gave a speech where she tipped the hand that there will be a rate increase. It's going to be 25 basis points. I'll give you my layperson's prediction. She's going to make a statement that they're looking at 2 more rate increases during the course of 2017. Markets have already, as you said earlier, baked that in. I think it's a nothing burger.
Yeah. So if you think about it, Harry, unless something happens dramatic tomorrow, I mean, I think you need to again go back and clearly understand what you own and why you own it, and on a go forward basis, I think equities are a good place to be, but just again, you got to be a little cautious with anything. Like you said before, you got to be careful driving your vehicle today. Same thing in our world.
Chuck, great to be with you.
Harry, thanks.
Thank you, sir. For all of your financial planning needs, turn to Chuck Malamut, the leader of his team, the Malamut Group at Morgan Stanley's Northfield, New Jersey office, 609-383-2010. And sit down with Chuck and you'll understand his perfected concept of total asset management coupled with the all-important asset allocation. And you'll see very quickly why he was selected by Barron's for 2017 as one of the top financial advisors in all of America and top 40 in the state of New Jersey. We'll be back. Breaking news, a Hurley in the Morning exclusive. Dateline 2017, Decision 2017, the race for the General Assembly. Has it just grown by one candidate, or is this candidate to be, not to be? We'll give you the answer next.